Welcome to today's segment of our edition of Market Watch Education. My name is Dennis Akinbogun and I am your regular host on this program. We've tagged today's segment as a stock market for beginners, and this is actually good if you are joining us for the first time. At the end of this segment today, somebody that is just coming to the stock arena for the first time will be able to answer a lot of questions on stock. I mean, at the beginners level, of course. So on this segment today, we will be talking about what is a stock. We talk about the component, the scope of stock. We talk about what is a stock market. We'll be talking about the various stock market portfolios. A lot of accounts you can open in the stock market. We also be talking about the difference between stock and indexes. We have stock, we also have indexes. We also be talking about stock versus bond. We will also talk about stock versus mutual funds, or ETF, which is exchange traded funds. We talk about long-term investment or short-term investment. We will be talking about passive and active investment. We will also talk about stock objectives. We also mention a lot of the various research opportunities we have in the stock arenas. We talk about investors relation page, where you can get them on each company or firm's website pages. We talk about From 10K, we talk about From 10Q, we talk about Bloomberg TV, and we talk about Google Research. And we'll also be talking about some terminologies that are inherent in the stock market. So without further ado, let's start with the basic, which is stock. What do you understand by stock? A share stock is an ownership in a company. In other words, that is a piece of a publicly traded company that you can buy and sell with your money. Every publicly traded company, they have this arena where you can go to, and that will of course lead us to stock market. So let's take it one after the other. Now, while we are still on stock, it is very important to know that a share stock in a company means a share ownership in that company. Let's take, for instance, we have Amazon as a company. You can decide to buy, just 10 shares of their stock. You can go there and buy 20. You can go there and buy 100 or whatever. So when you do that, you are actually taking partly or largely ownership of that company, depending on your capacity, capital wise. So stock market, in other words, that is a platform where you can go to do your trading, where you go to meet with other investors, stocks owners. It's just simply a market where buy and selling of stock take place. And this stock market, how do you actually assess it? This is different from our regular market like HEB, Kroger, or Walmart. No. So this platform actually take place online, and we have a lot of platform for this. So firstly, and I have to say this before we go further, that I am not representing any corporation. Everything I say right here is publicly the property of Africa Diaspora TV. So back to what I was saying, we have Robinhood, we have Fidelity Investment, we have E-Trade, we have TD Ameritrade, and we have penny stocks. These are just the popular among the various stock platform we have in the United States and Africa or Eurasia or China. So let's quickly talk about the difference between stock and indexes. We've talked about stock. It's a partial or largely ownership in a particular company. What about index? When we talk about index, we are actually talking about a basket of stocks. And let me dump this down. What does this mean? Let's take, for instance, we have Amazon. Amazon is one stock. Let's add Walmart to it. Walmart is another stock. Let's add Sony to it. Sony, that is another stock. When all of these, more than one or two, when they come together into one particular basket for you to be able to buy and sell, that becomes an indexes. We have a lot of them in the United States. First, I'm going to mention prominent ones and how they are doing. And I have to tell you again, we have a lot of them. Before you actually take any decision in the stock, make sure you do your research. So we have Dow Jones 30. Dow Jones 30 is an American company. This actually comprises or encompass 30 American companies. And from these, we have American Express, we have BA Boeing, we have Chevron, we have Cisco, we have Home Depot, we have Verizon, we have Walmart, and we have Visa, and among others. Remember, there are 30 American companies under Dow Jones 30. We also have NASDAQ. So NASDAQ is usually referred to as a technological company. That is the major difference between NASDAQ and New York Stock Exchange, which we'll later be talking about. So on NASDAQ, we have Zoom. You discover that those are like technological company. We have Amazon, we have Netflix, we have Facebook, Booking Holdings, Google, Expedia, Tesla, and so forth. We also have S&P 500. S&P 500 contains also about 500 American companies, and among these we have Nike, we have Adobe Inc., we have Advanced Auto Parts, we have Alaska Air Group, Allstate Corporation, Capital One, Equifax, HPE Inc., and several others. We have 500 of these in America. We also have New York Stock Exchange. New York Stock Exchange right now contains about almost 2,900 America. Well, not all of them are America company anyway, but they have they manage about 2,900 America company, and about 1,500 of this company, of course, they belongs to America. So we also have so let me just to mention few. Those are the different indexes we have. We've talked about the stocks under them, and we've talked about the index. So know the difference between stock and indexes. So let's talk about bond. What is a bond? So I'm gonna be doing this vis-a-vis stocks. I'm gonna be giving the explanation in comparison with stock. We've talked about stock is an ownership of one company, right? So you have to understand that there is also a great deal of uncertainty around stock. In other words, when you are buying a stock, there is not a contractual obligation on part of the company you are buying that they have to pay you back. You know, they don't have a legal contract, they don't have a legal binding that they have to pay you back. The return is constantly based on the current market value. However, there are dividends with stock. I'm going to talk about dividends in a later segment, hopefully on this segment. But right now, you have to understand that the only how would I put it, like the stock is associated with dividend, but at the same time the dividend is not even guaranteed. The dividend is also based on the market value. So let's assume that you've put $1,000 to Amazon right now, and they told you that they will give you 10% dividend of what you have put in there, which is about I think $50. You know, that $50 they might divide it quarterly. Okay, in the first 3 months we give you half, in the last 3 months we give you half, or in the first 6 months we give you half, and also in the last 6 months we give you half. But that even 5% is not certain, it's not guaranteed. If Amazon lose at the end of the day, they don't have to pay you, and they don't have a legal obligation that they have to pay you. Your dividend is based on profit. So stock are generally riskier and more aggressive than bonds, but it's, you know, comes with higher rate of returns. Bond, on the other hand, there is a contractual obligation on part of the issuer that issues them that they have to pay you back. It's just like, in a simpler term, that you are actually lending whoever you are buying their bonds money. So let's say if you are buying a government bond, that means that you are lending money to the federal government. You know, it may be municipal, it may be state. So, but that means you are lending money to the government. And if they don't pay you back, they are technically in default. It's in the same situation with a company. You know, I lend my money to a company, they are contractually obligated to pay me back my money. That is known as a contract bond, like the money you lend to the to corporation, to firm. So bond yields interest, while stock yields growth or dividend. Please take note of this. And you have to also know about bond that the less credit worthy the company are, the higher the rate of return you will get at the end of the day. Let's take, for instance, somebody with a bad credit, and that person actually wanted to lend money, and you know, he has bad credit, nothing good to show for his credit. In other words, that person is gonna get higher interest rate. The same thing is applicable to bond. The less credit worthy company are, the higher the rate of return. And you know, this is because there are less likely to pay you back. So you have less confidence, and that at the end of the day, this company might not. It's a kind of a gambling, but your money is still secure with bond than stock. Similarly, the longer you invest your money in bonds, obviously the longer the return at the end of the day. If you are lending your money out on bond for like 30 days, and and you are lending your money out for like 1 year or 5 years, the difference is gonna be clear. So that is the little difference between stock and bonds. Why should you buy bonds, or why should you buy stock? You have to know that one of the greatest reason between stock and bonds, or let me put this as one of the greatest edge of bonds over stock, is diversification. And what do you mean by concept of diversification? Okay, when you buy a stock right now and the company goes down, your money goes down with them. But when you lend your money to a company and the company file bankruptcy or they goes down, your money is still safe. Insurance will cover that for you. Or if the company is doing well, they ever come back again, they still have your debts. They are still indebted to you. They have to pay you back, and that is not applicable to stock. Your money is gone with the company if they went down. Secondly, on why you should buy a bond over stock is safety. When you do that, you have a kind of like a peace of mind, like, oh, my money is safe there. No matter what happened, I don't know, except the file bankruptcy or even the insurance declare that they won't pay nobody, which is very rare. This is America. And the third reason, we have income. Most often, when you invest your money in bonds, okay, you can decide like, okay, I want my returns to be like a monthly income, depend on how much you actually invest in the company. So that is the greatest or the most prominent difference between stock and bond. Let's talk about stock versus mutual funds or ETF. Mutual funds and ETF, I'll be using them interchangeably for the sake of this segment, and in a later segment, maybe next week, we'll be expatiating more on the difference between mutual funds and ETF. But for the sake of this segment right now, we'll be using them interchangeably. Mutual funds and ETF are pooled investment. What do we mean by this? They are different from stock. They are different from bonds, but they're like pooled investment, where the money of a number of investors is taken together to buy a large block or a large collection of security. So mutual funds operate like indexes. Like I say, you just like I think one of the best example that epitomize this is the issue of 401k. For those of our viewer in the United States watching right now, if you are working and you discover that a certain amount of money is being taken by monthly or every 2 weeks from your paycheck, and you begin to wonder that where is this money going, and you just have somebody from the corporate office just give you a call that, oh, you know what, we are investing your money for you. That is where your money is going. It's a kind of a pool investment. What these people do, they are experts. They just look at where to buy. They just buy a large securities, and at the end of the day, you'll be getting your returns back. What are the difference between stock and mutual funds? Second, first on this, we talk about decision making. When you do stock, you got to make all your decision all by yourself. You make your decision when to sell it. You make your decision when to buy. You make your decision how long you're gonna leave it there. The decision rests 100% on you in stock. But when you invest your money on mutual funds or ETF, you don't have the autonomy of this decision. You can call them that, you know what, I think I'm done, but still they can still give you time that at the end of the day or at the end of the month or at the end of the year, you get your money. So you don't have 100% the decision autonomy in ETF. We also have the concept of diversification. Then stock, as we have talked before, actually deals with just one corporation or one firm. But when in case of mutual funds, it's like indexes. We have a lot of businesses, a lot of companies that comes together under them, and it's very rare for all of these companies to go down at the same time. So you discover that it's diversify in a little bit. So we also have the management as the third one, as the third difference. The management is always different. Some people do the management for you. So but in stock, you do the management yourself, you make the research yourself, and so on and so forth. So that is the major difference between stock and ETF. Quickly, let's talk about long-time investments versus short-time investment. Long-time investment, I will say, this type of investment that you engage into and you don't expect rate of return, or you don't expect income in a short while. You just put your money there. Why I'm gonna leave my money for a year, for 3 years, for 5 years, or for 10 years. Those are long-time investment. We have a lot of stock, especially in this era of pandemic period. A lot of companies are already down. You just put your money there and you just forget about it for a year or 2 years. So you kind of get the idea. Long-time investment, the type of stock investment, you put your money there for a long period of time. And short-time investment, the type of stock investment, you put your money there, you expect an income or a return in a week, days, or few weeks, 2-3 weeks. And this actually, it's actually diversify in a bit. I mean, diversify not in the sense of what I'll be talking about, but diversify in the sense that, excuse me, in the sense that the investment, they're like I mean, that is a ball game on its own there. And I won't be able to talk about that much right now, because I think I will have to create another segment for it on this show. But there we'll be talking about contract investment, where you can go and buy contract. Those are option trading. You are trading option, and we'll be talking about this. Option is often intertwined with time. That is another part of stock. But for the sake of this segment right now, that short-term investment are the type of investment you go into. It might be daily, it might be weekly, or in a month. What are stock objective? I think it's very imperative to talk about stock objective. Stock objective, especially for beginners, if you are just coming to the stock arena for the first time, it is very important to define your objectives. Everything we do lies objectives. When you go to the school, you have objective, right? Why am I going to the school? Am I going to school for knowledge? Am I going to school just because my friends are going to school? Am I going to school to make money? Some people, I remember when I was growing up, when I was very young, I'm like, I want to become a lawyer. Well, when I grow up. So we have different objectives for different things. The same thing is applicable to the stock market. We have stock objective. Is it long-time growth, or is it a quick cash investment? Sometimes okay, I have a $10,000, I quickly want to invest it, in a week, in a month, maybe it will yield me another $2,000 or $1,000, or as the case may be. So these are stock objectives, which are very important. Another objective, we have what we call logic and emotion. I think I was talking to a colleague last week, and he was like, hey Dennis, you know what, Boeing is crashing right now. They just lost about $200 in a week, and I'm gonna put my money there. That is not logic, that is emotion. You are basing your emotion that because Boeing is crashing, and you're gonna put your money there. There are a lot into it. There are lots of factors that actually determines how the price of stock goes up and down. So logic, it's a kind of making an adequate research, being in your rational mind to make decisions, to do research, do your findings, to actually make sure you know what you are doing. Or is it because Mr. A is making money, that is why I'm going there? So you have to clearly define your logical, you have to clearly separate your logic from your emotion before you go into this. And let's quickly talk about research. Research is very important. So research in stock market is just like when you are going to school without the proper preparation. You need preparation. This segment or this video will help you, it will inform you to make some certain decision, but it's insufficient. It's not enough. This is just a guide towards, what you can do. It will give you just an infinitesimal idea about stock market. So when you talk about research, there are various research opportunities in the stock market. So let me talk about investors relation page. Investors relation page can be found in every company website. When you log in, let's say for instance Walmart, and in the search page in the top right corner there, and you put investors relation page, it's gonna bring everything or most germane information about how their stock are doing, the number of their investors, their capital shares, and so on and so forth. This is one of the best places you can ever get, an insight edition about how a company is doing with their investor, or how their stock are doing. We also have 10K from 10K. From 10K is actually a form in this this every company also has this, and you can get them in their website. Also in the search page, just put from 10K there. From 10K is a form that contains the annual projection of company growth. So let's say Walmart as an instance. What is gonna be in Walmart from 10K? Therein you're gonna see how Walmart has been doing in the last year, which is 2019, from January to December. It shows the annual projection, how they've been doing. It's gonna talk about their growth, their expenses, their expenditure, their revenue, the government policy. So it's actually a rich form because it shows the 12-month projection. And we also have Form 10Q. Form 10Q, unlike Form 10K, shows a quarter projection. In stock market, we have quarter earnings. And at the end of this quarter, we have 12 months in a year. We have the first 3 months. Yes, we have 4 quarters in a year. The first 3, the second 3, the third 3, and the fourth 3. At the end of every of these quarters, we have what they call earnings. And earnings is just a kind of online ceremonial pages where each company release it. They have different earnings dates. It varies per company, where they just release it and they were like, okay, in the last 3 months, this is how our company has been doing, or in the last 4 months, this is how our company has been doing. This is what we gain, this is what we lose, and that will give you an insight, at least before you actually go into their particular side, that this is how our company or your money will be saved with us or otherwise. We also have Bloomberg TV. Bloomberg TV, this is a TV where you can get it from Google, or if you have channels, we have Bloomberg TV there. All they talk about 24/7 is news about stock market, about oil prices, about like economy. They deals with that is the absolute place I think you can get the best information in stock market, because they analyze every company, like everything you need to know about stock, especially during stock hours. So Bloomberg TV is actually good. And last but not the least on this, I'll also be talking about Google research. Everything we do these days, I think we have to type it on Google. Like some people will even type on Google that, what food should I eat this morning? So the same thing is applicable on Google. There are very rich information on Google. Just go there and type it. What is Walmart stock today? Instantly it's there right under the tip of your finger. What is Amazon stock today? And you know what the most interesting thing about Google research on stock is, it gives you opportunity to view their growth, the company growth, like days, 3 days, 5 days, or even month, up to like 5-6 years, as the case may be. So like I said, this is just to inform your decision, what to buy about stock market, if you want to actually invest your money in stock or bonds, or you want to do short-term investment or long-term investment. That is the essence of this segment. It's not actually to tell you that, you have to buy Amazon or you have to buy Google, but it's designed to inform a logical decision. So, and I used to tell this to my listener, that do not invest a large sum of money, especially if you are coming for the first time, or if you are a beginner. Don't invest the amount you know that is going to make a crushing impact on you at the end of the day. If you lose, it takes step. You have to take it from the beginner, intermediate, till you become an expert. And when you become an expert, then you can do, you are very comfortable then with a lot of strategies. So, and at the end of the day, you have to understand again that you gain some, you lose some. It's not automatic that, I'm coming to the stock market, I have to make the winnings every time. No. If you have that mindset, I guess stock market is not for you. It doesn't work like that. So the concept has always been, you gain some, you lose some. Sometimes you might even lose everything entirely. Especially right now in the United States, who could have predicted that there would be this global pandemic in the state? No one. So it fluctuates, and a number of factors, especially the government policy, actually determines sometimes how the price of oil, the price of stock of a particular company goes up or goes down. So we'll be rounding up, and this will be the end of this segment. We hope to join you again next week, and I want to thank you for tuning in. Thank you for staying with us, and thank you for listening. And I actually hope that you have gained something. And if you have any questions or any suggestions or anything regarding what we've talked about, you can just contact us on our various websites, Africa Diaspora TV. So we'll be there. Thank you. I hope to see you next time again.